Ladies and gentlemen, welcome to another podcast. Welcome to another Imperial Advocate podcast. Today we have Daniel, who is our head of finance. Daniel, introduce yourself.
Hey everyone, I'm Daniel Leonov. I'm from Simply Money. I'm a finance strategist and I help clients build property portfolios with specific credit structuring policies in mind as well to help move them forward with every deal.
Okay. Daniel, the first question I'll have for you, initially the way these sessions work is I ask the most frequently asked questions in regards to finance. Talk to me about how would we structure an NDIS loan and how is that different to a residential property loan?
No difference.
Okay.
Plain and simple. No difference.
Okay.
Yep. So the structure you can have is you can have it in your own individual names or you can have it in a trust. Mm-hmm. Okay, you can't have it in a company structure unless the company is a trustee of a trust. Mm-hmm. Pretty well no different.
Right. Is it more complex when you do a NDIS loan compared to a
structuring wise? No.
Structuring wise, no. Yeah. Okay. Where does the complexities come in?
In everything else.
Okay. Okay. Go on. Elaborate.
Well, everything else. So what I mean by that, so the way lenders assess the creditworthiness of the borrower, the types of documents that we require. So. By types of documents, I mean you've still got your generic sort of things such as pay slips, bank statements, that sort of stuff. The particular lender for the NDIS just requires more of it. Okay, so there's that. And of course, when it comes time to value the property, understanding how it's built, how it makes an income, that's a little bit more complex as well. Okay. And the overall time frame with everything. Complexity, I think, just adds time to everything.
Right, yeah. Okay, so it's more like the time frame exceeds from a normal residential.
By far. Yeah,
okay.
By far.
Okay. So I've got a question over here, which asks one of our prospects who's asking, how do lenders evaluate the credit worthiness of borrowers seeking financing for NDIS investment property?
Yeah, it's a good question. So what you've got to remember is at the end of the day, it's a standard residential home loan. Mm-hmm. Okay, so it is governed by the NCCP, which governs all other sort of home loan applications. So it does link back to certain criteria where banks need to act responsibly in the lending, things like that. We've also got our best interest duty to play as well. Basically, how all that ties in is it's a standard home loan application, just with this particular lender, they're maybe a little bit more conservative, so that dictates the extra documents that's required, everything like that. But essentially, it's the same sort of data. So it's your credit score, it's your current history on existing loan repayments. They all have to be up to date. No defaults, things like that, that would normally be a red flag.
Okay. Yep. Okay. Awesome. Daniel, a question that I get a lot from the prospects, right? Obviously, we know that these NDIS properties are a bit expensive to build, right? So they're about $100,000 to $150,000 more expensive than a normal build, right? How do banks value that? Would they undervalue that property? What's the process with that? Like, how do we ensure that the banks value the property accurately?
Yeah, it's a very common question. You're right. I think the term expensive should be relative. Expensive compared to a standard residential property with the same dimension, same number of bedrooms. Yes. Expensive to an NDIS property, which should be compared. It's an NDIS property. It's a different style of property, right? So to answer the question is banks would not value it correctly at all. You need to have specialized valuers that understand what the property is, how it's constructed, who it's built for. So it's built for individuals with specific needs of care, and how the property generates an income should also come into the valuation as well. So the lender that we use has very specific valuers on their panel that do value the property correctly, taking into account all of those things, and we find that it's pretty much valued correctly on price.
Okay. Awesome. So initially, the question is, Daniel, is how does an NDIS investment property aligns with the client's broader property investment strategy or wealth creation strategy?
Yep. I love that question because it really links in with what I'm passionate about, which is helping my clients build a property portfolio strategically and sustainably to keep them
going. That's what you're passionate in. That's what you love.
Correct. That's right. So How does adding an NDIS investment property?
So where does the NDIS property fit in that whole picture?
Yeah,
Wealth
fantastic,
building, yep.
fantastic. So, at the moment, if you've got an investor client, I think most people would find that it's actually the borrowing capacity is substantially lower than what it was 12 months ago due to all the interest rate rises. And don't forget, borrowers are still getting hit in most cases at both ends. So when they've got the rent coming in, most banks shave to 10 to 20% off that. So how does an NDIS fit into all of that? Well, due to the potential rental income, which we're able to use as part of your borrowing capacity, it actually allows them to add an extra investment property into the portfolio, diversify a little bit if they've got mainly residential, or even if there's a commercial property in there. It diversifies that, adds some injection of positive cash flow, quite good positive cash flow in most cases, which helps with their borrowing capacity. Whereas you've got most borrowers that were maxed out due to the high interest rates at the moment, well, all of a sudden, this could be quite a good alternative for them in the current market.
To add to your portfolio, so
Correct.
you get a higher positive cash flow.
Correct.
And not just it's paying for your own property, but it's paying for the other properties as
That's
well.
right, yeah. Well, and just to elaborate a little bit more on that, what I usually like to get my clients to do is any extra cash flow from that, use it to pay down non-tax deductible debt. So that's your owner-occupied debt, that sort of stuff.
Right, okay.
Get rid of some bad debts as well, car loans, credit cards, things like that. If that is the strategy to help maximize their property portfolio creation, which is what I'm good at.
Exactly. And a lot of people that I speak with, their main thing is that positive cash flow, that they're going to make that extra $100,000 in rental income. Right?
Especially now in the current market, people are hurting.
Exactly.
Cost of living, interest rates.
Especially when I speak with a lot of a lot of potential prospects, right? They're focusing on they're focusing on the micro perspective, right? And the micro perspective is, hey, I'm going to get that extra $100,000 in rental income, which is amazing, right? But what they are failing to look at is a macro picture.
Correct.
Right? What is that $100,000 additional income is doing for you, right? You can utilize that to pay off your, as you said,
non-tax deductible debt.
Exactly.
Bad debt.
Right. And what does that do is initially you've got a capital with debt paying by itself. And over time, you've got a full property that's fully paid off. And the way you've achieved that is through an NDIS investment property.
And look, most of the sort of research and calculations I've done personally are pointing to the fact that owning one of these NDIS properties actually helps pay off your owner-occupied principal place of residence mortgage up to 7 years plus faster. Which is life-changing.
Exactly.
That's huge. That's nearly a third of the initial loan term.
Exactly, right. And then not just that, but the interest that you're paying in that 7 years' time
greatly reduces.
It greatly reduces as well. So it's a win-win situation. So initially, in conclusion, having an NDIS investment property part of your portfolio for experienced investors is...
Well, it could very well change the game for you.
100%, 100%.
But come and speak to us.
Daniel, is there anything last regards that you'd have for someone that's on the brink of making a decision whether or not NDIS is something they want to consider? Now, obviously, you've done more than, I'd say 100 and you've done obviously more than 200 plus settlements on NDIS loans. What has the experience been so far? People that you've helped 2 years ago, or last year, or something along those lines. What's the experience been like for them?
Quite positive. So we deal in the construction space, so it takes time to obviously build those. But a lot of those are starting to now get tenanted.
Okay.
So positive. Yeah. The only if you could have a negative is the amount of time the finance application takes. Which is just it's what we work through. We do prepare clients for it. This is complex. This will take time, but work with me. I'll make it happen.
We'll make it happen.
Yeah,
we'll make it happen.
it.
So we'll make it happen.
That's it.
Awesome. Thank you so much, Daniel, for taking out the time to record this podcast. I know you're camera shy, but you did an amazing job. I'll give you a high five on that one.
Thank you. Ta.